The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more do we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And a little early on the pickup there today. A little early. Okay, so what do we have going on today? Well, going into a 3-day weekend, always fairly interesting. You normally get lighter volume. We've got about 2.1 million or billion shares on the New York Consolidated Tape. So, yeah, a little lighter, but to be expected, and surprisingly up on this day. Normally, you see a lot of sideways action. My thoughts are, though, that the reason we're up is probably a lot of short covering. They were looking for a market that was going to go down. Normally, if you're bearish, you want to see the market go up on a day like today, and then get the 3-day weekend. And that's what you got. So if you're a bear, it's about as good as you can get. I just have a real problem knowing that the news flow is going to be nothing but rainbows and unicorns, at least probably for the next 6 weeks. So we'll talk about that a little bit more today. I found the article we were talking about yesterday on taxes, and then you look at the rest of the stuff going on in the market out here, and it's just tough to get real bearish because yet there are no signals yet. And being short or perpetually short, being the perma bear, you get into these markets that kind of get a life of their own. There just isn't there much to doing. Anyway, 42 points higher in the NASDAQ, 199 in the Dow, and I had to sneeze again, and 16 points higher in the S&P. So what do we have going on here? Well, it's all about earnings in the dollar. I mean, we've got to really probably look at that. The big thing was the dollar moved down today after a lot of problems with Germany and the ECB. A lot of indecision out there, kind of resolved, and that really kind of turned the dollar the other way. Starting just about when everybody got to work in Germany, they said that they were doing 24-hour negotiations. Amazingly enough, they're having the same argument we are, or disagreement, whatever you want to call it, about immigration. They've voted to significantly pull back immigration. I mean, like 1/10, maybe 1/15 of what it had been. And maybe that's a bit why everything is going gangbusters and the dollar's down, that they finally decided that maybe it was time to have a little semblance of reality. But you never know. So anyway, dollar down, and of course that means the gold's doing good. Gold was probably going to be up a little bit on the 3-day weekend anyway, about $15.70, 1338.20. As I said, why most people shied away from it back on the 10th and 12th of December. I thought gold was one spectacular buy and look for it to kind of stumble up. Kind of hate that this is up $15 today. I'd rather this thing just kind of slowly move higher, $15, and not have some kind of blow off top. $15 is a little much, but going into a weekend, my guess is that we open up $7 to $8 down on Tuesday, if nothing generally happens with the rest of the market. So we'll probably be up. We got a 3-day premium. We are seeing that in gold, not so much in oil. Crude up 37 cents. But again, for safety over these weekends, everybody wants to park their cash somewhere. Question is, where is it going to be this weekend, oil or gold? The answer is in. It is in gold. Look for a little of that to come out on Tuesday when we return from the 3-day week. So what else do we have happening? Well, we had some earnings, but not much going on in there. We will get into that. And some announcements. Facebook saying some things. Had some questions about that, so we'll talk about it. Be in the 3:30 hour with Tom O'Brien. I've got a lot of stuff from the Consumer Electronics Show I want to talk about. Cures for Alzheimer's, or possible cures, and a few other things. And time slot seems to go very, very fast these days. But anyway, we'll try to do that last half. But a lot of interesting things to talk about in that section of it. And as always, we like to kick the show off, with a little bit of history.
That it's all just a little bit of history repeating.
On this day in 1970, the Boeing 747, the original jumbo jet, makes its maiden flight. The 747 was the first wide-body airliner, first to use the twin-aisle concept, and the first airliner to use high-pass turbofan engines. 1,540 were eventually built, with some 900 still flying today, almost all outside the United States. They make very good long-haul flyers. They carry a lot of cargo, and just with more and more the spoke and hub design of flying here in the United States don't make any sense. You can't fly on a 747 on a U.S. airline anymore. The only one you can grab is Qantas, which goes from New York to L.A. and back again. But I think actually it goes to L.A. and then it goes to Australia and then comes back to L.A. and then back to New York. But probably in the annals of history, going to be one of the best designed and engineered plane. They thought maybe it would last 5 to 10 years in the market. Got sold for some almost 40 years or more, and had a great safety record, although a lot of people did bad things. Terrorists blew up a bunch of them. A couple of morons in, was it Crete? Some little island in the Mediterranean. They decided that they had to come back and land on the strip where another 747 had already was sitting to take off. The controller didn't tell anybody. There were a whole lot of things. No problem with the 747, but one 747 literally ran in at landing speed to another 747 and killed darn near everybody on both planes. Still the biggest loss of life ever, but nothing to do with the design of the 747. Yeah, somebody did shoot one down by mistake. And of course, we also lost one to the North Koreans shooting one down. So we've had a lot of them, but holding on.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And somebody in the den, I don't know if they're tongue-in-cheek or something, saying something about the Navy accidentally shot one down in Long Island. I think they're talking about Flight 800. And one of my customers ended up working on the reconstruction of it very late in the game. I got to go with him and go in and look at the reconstruction of all the parts. Nope. Pretty much the gas tank. You can go in there and look. And I think maybe that's a problem, is that you couldn't go in there and look, and a lot of conspiracy theories. But to me, it looked pretty much like the gas tank blew up. And the reconstruction, the forensics, all pretty much were in there. I didn't see anybody trying to cover anything up or oppose anybody's opinion or anything else. But what can you say? Anyway, wanted to go back to this. There we go. It's hard for me to continue to be bearish. Maybe we just go sideways or something for a while before we get a pullback. But this was the article I've been talking about for a couple of days. U.S. Treasury and the IRS on Thursday put out new guidance in withholding tables for employers that incorporate changes from the new tax law. Under those new tables, the Treasury estimates that 90% of people who get a paycheck are still likely to see more in their take-home pay. As of February, employers will have until February 15th to incorporate the changes in their payroll system. I thought it was the 10th. So thanks for someone sending me the link to this. I thought it was the 10th. It's 15th. But what I'm going to say is the first couple of weeks of them getting that money, it'll feel like a raise. And it's going to be very hard to get people all sourpussed on this and the market. Besides that, a lot of people have a percentage that goes into the stock market every month. And as their take home gets larger, so will incrementally the money that goes to their 401ks. So if you wanted to build the perfect bubble, you've got all the elements ready to go. I just don't see even a pullback until somebody gets a little bit more euphoric with a little more cash in their pocket and a little more cash coming into the markets every week. So far this year, which isn't very long, 12 days, we've had $24 billion of new money come into the market, which is a virtual tsunami. And one of the reasons why we are higher. So why I see a lot of things to scare me. A wall of money coming in is not one of those things that does it. I think there's some weaknesses. I do think that there's probably going to be a lot more sector rotation going on in the near future, and probably a little bit of inflation, and probably why we see gold moving a bit, but nicely. Anyway, give me a call at 877-927-6648. Email me at path@tfnn.com. And what else do we have here? We got 5 minutes for this segment. Wanted to look at Facebook and what we were looking at, and that was pretty much everything we want. I had a couple people email me this morning about this. I wanted to look a little bit longer and read exactly what these guys are doing. As the press has done for the last couple of weeks, they kind of shoot at the hip, don't do a lot of thinking, not a lot of introspection going on. And I guess if you have to provide news 24/7, it would be tough. But Facebook coming out saying they're going to change the way their news feed works. And as much money as these guys are making, the rates have continued to be very low, in fact, lower than many other avenues of advertising, including Google. So they haven't had spectacular rates. They have been able to sell a lot of spots, sell a lot of seats. They just haven't been able to sell those seats for high prices. The thought is that maybe they're going to get advertisers to kind of start a little bidding war and have less advertisements. In the news feed, I'm not a Facebook guy. I was raised in Hawaii for the first 10 or 11 years, and actually almost, guess I left just after the 747s started showing up. So what was I, 11? I'm gonna have to go back and look. I think so. Anyway, I remember the big planes coming in shortly just before I left. But the Facebook thing always was kind of a narcissistic kind of thing. Maybe it's just me. And maybe it's other people that have always showed me their travel photos and their kids and their dogs, and I find it extremely tiring. I don't know. I never thought that I would have dragged in anybody, make them look at the slides of my latest trip somewhere. I don't know. Maybe it's a lack of something inside me, but I get kind of creeped out by Facebook. I get kind of creeped out by LinkedIn. I've got both Facebook and LinkedIn page, and I've joined absolutely nobody. Again, I feel narcissistic. Now, other people's don't. They've been brought up this way. They got to share literally everything to the point you're sick, which gives you an indication what I think of Facebook and other social media outlets. There can be either a boon or a trouble, and even the owner and creator of the Facebook says that it's basically become a problem for him. They are noticing engagement getting lower and lower. Literally, people getting worn out of repeated hateful political conversations. And to that end, they think that they're going to blow up one day if they don't do something. So this is the lesser of two evils for them, i.e., maybe pull the heat off just a little bit and let people maybe enjoy their lives just a little bit more. I did consume some cable TV news a year ago, I decided I wouldn't, over a year ago now, actually going into the elections, decided I would not watch it again. And I would imagine that if I've racked up more than 10 minutes on a cable news show, other than watching business news during the day, either Fox Business News, Bloomberg, or CNBC. And I always leave the audio off unless there's something that I really need to pay attention to. I mostly look at it as giant bags of lies from everybody. Everybody's got a propaganda angle. I feel much better off just reading the news. Anyway, I think Facebook has run into the same thing from conversations that I read it today and arguments from the company. And probably the best thing they could do, because they're probably going to start losing huge amounts of customers. And of course, engagements will be lower. So probably time now to let a little steam off. People can't keep this level of hatred going forever. Eventually, you just get worn out. And I think they've figured that out at Facebook. We'll be back in a little bit after this break. We'll talk a little bit about my webinar, and we will go to some charts in the next segment.
If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. And we're going to talk about webinar coming up on the 17th. So next week. give you a chance to get involved. If you want, go to the front page of TFNN and check out either the Tech Insight or the Path of Least Resistance. One of the new things I have out is a thing called the Short-Term Sector Oscillator. I've done it for 21 different sectors based on EFTs, and it's actually a fairly easy thing to explain. If you want the shortest possible version, when it gets above the big gray band, sell. When it gets below it, look at buying. And the bigger the divergence, the better off that you are. And in this case, we can see that the oscillator came way, way back on the junior gold miners and did what it does just about every time, which is find at least a temporary low. This is kind of based and started on 9-day moving averages. I went a little farther than that. I want to thank Basil for his input a little bit on it. And but I worked a great deal on this. I'm going to work on the webinar come Monday since we've got that day off. But if you want to see what is a fairly simple indicator that works well, especially for swing trading and shorter term trading, let you know where you are in the cycle and when it's when you think you should be buying and selling for the maximum return. In this case, I thought that we were going to pull back a little, but I didn't want to lose my position in gold and kept them feeling pretty good today. But we'll get into this and we'll get into all the other sectors out here. And one of the ones I wanted to talk about also was the SMHs. I had some questions. Do I think that there's a great deal more there? And the answer is it's still very problematic, but hopefully you can all see this at home. And that is we kind of went to those highs. We're back into the gray area now. If you want to maximize, you want to try to wait until this thing gets flushed out. And right now we're kind of in the sideways middle part. And while you might put trades on, if you're going to short, you pretty much want to wait until these things hit some highs. And if you want to go long, you kind of want to wait for these things to wash out. You'll see what I call a little fish hook down here that goes right into about the 10th or 12th, where we were buying gold miners in the daily newsletter. And there's kind of the same thing in the semis out there. You did find the bottom, but pretty much when you go above these levels, everybody's buying, and there's no person left to buy. The SMH is now kind of in the middle of no man's land, and it's problematic. Could they go a little higher? They could, but I'm thinking there's better sectors out there in the market. As we left, we were talking about Facebook, and down with fairly strong volume out there. Twitter also running into some issues, getting a little love today. Of course, there's a lot of talk about buyouts. Yesterday, kind of interesting talk about how they were planning to malign and molest free speech. Doesn't seem to have done much to Twitter, mostly on the incessant rumors that they're getting bought out. Did get to a new high here, and you were looking for something in the range of 46 million shares. You got about 30 million shares now. Question is, is this company really turned anything around? And I guess we're going to have to wait till the next earnings cycle to really take a look at that. What else do we have? I wanted to look at SQM. We haven't looked at that one for a little while on the phone, or I mean on the show. But of course, man, have I heard every story in the book about buying lithium these days, and every other story. These guys have literally beaten this horse with the whip, trying to get it up. Now, a little puzzling is the lack of volume the last couple of days, and maybe a little dark cloud cover today in SQM. The September 20th high, $63.80 with 5.4 million shares. Yesterday you had 842,000 shares. Today you got 557,000 shares. The energy is kind of okay on the way up. I really dislike the fact that the volume's even half of what the last attempt back up here on November 1st did. So let's take a look and see whether or not this thing is just really, really overbought. Think about it. But I think you're going to get the answer on that if you start seeing additional downside on Monday in lithium. That could be it. Retailers getting a boost over the last couple of days on Walmart news. At least the other ones are. Walmart closing its big stores. But I think this kind of disguises the bigger story behind it. Some people have talked about it. But 10 of these stores are going to be fulfillment centers for their online and their effort to go after Amazon's business. And it's up a little today, fairly light volume. I would still wait for $92 on this. I don't see any reason for buying this thing now. But of those other stores, a lot of them, they still have leases on. My belief is that they're going to get these first 10 stores up and going for the fulfillment of their aggressive online presence. Is that probably the best way to say it for Walmart? And then see which one of these other ones they can convert over to shipping and pickup for your online orders. But Walmart really getting aggressive on Amazon's behalf and having a local and especially in town area for them to make deliveries from and for people to pick up from does make a lot of sense. But apparently that is going to be part of it. You're going to be able to order something and it'll show up at the store and you can go pick it up or you can wait for them to deliver it. But Walmart kind of likes having these stores fairly close to your house. That means that the delivery truck drivers don't have that much farther to go. Down here in Tampa, Amazon has its fulfillment center about 20 miles east of town in Plant City. And I'm pretty sure that's where it's at. And it takes a little while for them to get all the way over here into Clearwater, Florida. A little better location to be pretty much smack dab in the center of what's going on here in Pinellas and other counties. Okay, what else do we have out here? Wanted to look at a couple other ones. Wanted to look and see how some of these ones that are just continually making 52-week highs, MSFT, are doing. We'll look at Intel again. Microsoft is going up. Now, here's something that you want to think about. What happens if Microsoft hits 90? We'll talk about a statistical edge in Microsoft. If it prints 90 or closes over 90. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're going to go to Mike from Lakewood. How you doing, Mike?
Fine, thank you. How are you?
Another day in paradise.
Yeah, I'm talking to you about GameStop. I own the February 20 puts. I bought them yesterday. I'd like to know if, and they're basically now trading with the stock with very little premium. I'm just trying to decide if I should just hold them or if I've got 5 weeks on them or go ahead and take my profit and be happy.
I'd hold them. This is one of these companies that's been perpetually short, and I was short it back a long time ago when it was 40 or 50 bucks. I forget now. It's been a year or two. But literally everything that could go against these folks is going against them. They're in retail spots. They are in a business that's going to digital delivery. They're the kind of they're the equivalent of Blockbuster, and where streaming's coming in, and literally everything you could think that's going against these folks has and will. I'm just surprised they're still in business. So I like your put play on this. There aren't a lot of stocks out here that are literally going broke. This one I suspect is. And, of course, until next September, you really don't even have a bullish bias coming into this whole sector. Not only that, but it was kind of a weak Christmas for all the game companies, for the actual producers of the game companies, Activision and the rest of them. I mean, the stocks have held up, but there wasn't a lot.
I was going to say, you said that a little bit weak, but I'm just looking at Activision to pick one of the three big ones, and they're trading it very near. I think they're above their 52-week high right now. So. Yeah,
but I mean, when you looked at the earnings call and what they sold in Christmas, should have been a great deal more. So
I see what you're saying.
Should have broken out not much higher. Everything's kind of high right now, but they didn't do that much. And there's another thing, and that is when you buy a game, GameStop doesn't get a lot of the cash after the sale. Normally, when you buy one of these games, you can buy expansion packs, and you may even spend more. I've seen people buy $100 worth of expansion packs for $60 worth of game over the years. So there's a huge follow through for people to buy new scenarios and other things in these games. Sometimes they're in-app purchases, but especially the big part of esports, which is first-person shooters and other games like that are the big thing right now.
Right.
You buy that through Steam. You don't buy it from GME, and you can't hardly buy it from them. I don't think you can.
That's what I was just going to ask you, because I'm not a gamer, but I understand when you talk about expansion packs. So what you're saying is that you don't normally, once you buy the game, you don't tend to buy the expansion packs through GameStop, or are you saying you really can't buy it through GameStop? You have to buy it through
I've never
the
seen one in it. I don't know if you could order it or not, but everything I see is you order it through Steam, which is what I do. But I'm not, I don't play lots of video games. I got a couple that I love to blow off some steam. But there's a company called Steam, which is kind of the back engine for all these.
Can you spell that or give me a symbol? I'm not familiar with them.
It's not a public company.
Oh, okay. Well, that's why I don't.
Yeah, it's STEAM.
Oh, okay. Steam, like in Steam. Okay, I got you.
Right. And what these companies do, in fact, I'll bring my little thing up here if I can find it. We'll put it on the screen. Oh, it's been moved. You want to delete this shortcut?
I got one more quick question. You got time for one more?
I got plenty of time today.
If you were going, I know about the gaming thing, and now they're even actually offering scholarships and all that to gamers, I guess, in a few areas. What company would you look to besides the companies that sell the software, the big three, Activision, Electronic Arts, I guess Take-Two? What company would you look to take advantage of that trend towards gaming being basicly its own industry? Logitech or somebody else you know of?
Well, right now I think they're way overbought, and here's why. There tends to be a kind of a rhythm to them having a couple of good titles and then a flop. And normally what you want to do is buy the next big flop, right, when these things get washed out.
Yeah.
And you just really haven't had one. And that's the problem. I don't know of a good one that you can pull that has had a pullback because of a flop. And generally, they'll all flop at once. But this is not too different than the movie industry, where everybody kind of does the same thing. The only difference now is these big titles, instead of a movie costing $100 million to make, these titles, well, they'll put $300 million in it, no problem. But they'll make that $300 million back in the first month of shipping, and they may bring in $1.2 or $1.5 billion over time.
Yeah, I'm sorry, I may not have made myself clear. I wasn't talking about the companies that produce the games. I was talking about the people that would support the gaming industry as far as, I guess they have almost things like a World Series of gamers, things like that.
Yeah, no, it's like sports. It's all paid by advertising, so I don't know.
Right, that's what I'm talking about. What would be an area to go to besides the people that produce the games that would, or is there anybody? Maybe I'm just reaching for something that's not there.
AMD and NVIDIA.
Okay.
Literally.
I know they are. What about Logitech?
They make a little money, but they're not printing money. I mean, especially like NVIDIA right now, and they've got kind of the market sewed up. They've got like, I think 8 different SKUs across the line of their latest 1080 system. So whatever you want. AMD to a lesser extent. The big reason for getting in with NVIDIA is just that they have sewed up the machine learning market with those same cards.
Right.
So you get a little bit of support where if AMD doesn't do well because they didn't sell so many video cards for gamers, maybe you get that made up a little bit for NVIDIA, because they've at least got a 2-legged stool to AMD's one, right?
Right.
Because AMD.
Okay, well, thanks. I'm sorry, I didn't mean to cut you off. I appreciate your insights. Have a good day.
You bet. Anyway, yeah, there's just in gaming companies, you can either get the companies that sell the games or the video card manufacturers. Intel, of course, maybe AMD for the processors, but really for the video cards. And that's it. It's a fairly vertical market, and it's controlled by Activision and Electronic Arts and a handful of those companies. If you really want to play these companies, they have a thing called E3 that you need to look into. E3 is the convention for all these video games, and you see a huge amount of movement. If you know what's going on, you can pre-run ahead of a lot of these game companies and make some money, because like that, most people in investments don't know a lot about video games. So kind of easy area to go after. We'll be back and wrap up the show for the week.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And anyway, wanted to look at a couple of them. I mean, the video game business, for the most part, for the professional esports thing, Intel, AMD, NVIDIA, Microsoft, Intel. There's just, you don't need to go that much farther out. It's pretty tight-knit business. Steam, I think, will eventually go public, and they are just kind of the glue that everybody hooks to, and they do all the back-end work and make sure people aren't cheating and a lot of other kind of stuff like that. Microsoft did pop up higher, 89.62. We didn't talk about what happens, but this thing hasn't ticked through 90 bucks. But when it does, and it closes at 90 bucks, 80% chance that it hits 100. So, man, are we going to have another month of just slow creep higher in Microsoft up to 100? Well, we'll probably find out Monday. Maybe this thing's not going to hit 90 today. But we go into options expiration next week, which is 85% of the time bullish. At least you don't get a close below Wednesday's low, which isn't going to be that low, right? So maybe you get a little pullback, but it's not going to be anything to write home about. And we've got a lot of people that are short the market. My guess is that they probably are shorting again at the close today. And man, it may just be this constant move higher, maybe not justified, but certainly problematic if you are short. We want to wait until we see, oh, is that me? We want to wait until we see some kind of signal before we pull the trigger out here. I'm going to stay long as I can. I know it's tough. You all have a great weekend. We'll see you Tuesday. Same bat channel, same bat time. Remember to sell when you can, not when you have to. And we'll see you with Tom at 3:30, talking about technology, the big consumer electronics show this week. I'll talk about what was the standouts there and a handful of other interesting tech items.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.